Hi everyone and welcome back. This is part 2 of the 3-part series in regards to the different loan types that are out there. And again, today I have my special guest, Lisa Freitas with Golden Eagle Mortgage. Lisa, thank you for joining me.
Thank you for having me.
Today we're going to be discussing FHA loans. I know a lot of people out there hear the term FHA loan, but what is it? So Lisa, let's get started. What is an FHA loan?
An FHA loan is backed by the Federal Housing Administration, and it is a government loan.
So it's government insured?
Government insured loan, yes.
Okay. And so what is the credit score that is needed for an FHA loan?
We can go as low as a 580 credit score. However, with a lower credit score, there are additional guidelines that come along with that.
Okay. And guidelines meaning?
Just additional criteria that you would have to meet in order to qualify with a lower score.
Okay. Mm-hmm. So Lisa, you had mentioned criteria. What are some of the criterias?
Well, Donna, every situation is different. Of course, with the lower credit score, some of those overlays or the criteria would be a lower debt to income ratio. Of course, with an FHA loan, it has to be the primary residence. So you should reach out to me and we can go over your specific situation.
And again, Lisa's information will be in the description below. So if you'd like to ask her anything further about the criteria, again, please look in the description. So what is the down payment requirement for an FHA loan?
The minimum down payment requirement is 3.5% for FHA. So that gives a lot of borrowers opportunity with less down payment. Of course, it comes along with an upfront FHA fee and monthly mortgage insurance, but there's a lot more flexibility with an FHA loan.
So Lisa, you mentioned upfront fees with the FHA loan. What are those upfront fees?
So it's 1.75 of the loan amount, and that is built into the loan amount. So it's not an additional fee that you have to come in with. It's actually built into the total loan amount.
Okay, so it would be in their payment, monthly payment.
Yeah,
correct?
So you're going to have your base loan amount, and then you're going to have your total loan amount, including that 1.75 upfront fee built into the loan.
Now, I know you mentioned that fee would be included in their monthly mortgage payment, but I know with an FHA loan, there's what they call an impound account. You have to have an impound account. Can you talk a little bit on that, what an impound is?
Yeah, so an impound account is basically your taxes and insurance that will be collected with the payment as well. So every month when you're making that monthly mortgage payment, it's going to also include your property taxes and your insurance, as well as mortgage insurance with an FHA loan.
And that's over the 12 months, correct, in the year?
Yeah, so basically the taxes and insurance are broken down over 12 months and collected with your mortgage payment. And it ensures that the lender has enough funds to pay your taxes and insurance when they are due.
Okay, so the homeowner doesn't have to worry about paying the homeowner's insurance and the property taxes and that primary mortgage insurance, right? The mortgage servicer collects it.
It's all wrapped into your total mortgage payment, so you don't have to worry about it. The lender's going to take care of dispersing those funds when taxes are due and also when your insurance is due.
And I would think that makes it nice for the homeowner, especially if you're a first-time homeowner and having to keep track of homeowner's insurance, property taxes. It's kind of like it's automatic, right?
Yeah, in most cases, it's the better way to go. You don't have to come up with that lump sum of money. Of course, old-time buyers who managed it themselves, they're used to doing that, and that's okay if they have the equity in their home to do that. But most new buyers, it's just the way to go because you don't have to worry about saving that lump sum of money to pay taxes and to pay insurance when they're due.
Right,
and it's already
depending on where you buy and how much, it could be a lot.
It can, yes.
And so to have like that little savings built in. So Lisa, is there a loan limit for an FHA buyer?
There are loan limits, so per county, wherever you are purchasing the home or looking to purchase, we would want to know what county you're looking at because there are loan limits per county.
Okay, so that's just going to vary throughout the state of California, correct?
It varies. So again, it's important to let us know what specific counties you're looking into, where you're looking to purchase.
Okay. And then, so what would qualify a home buyer for the FHA loan? I know you definitely had mentioned the credit score and you mentioned the down payment. What else would qualify a buyer for an FHA loan?
There's a lot of flexibility with an FHA loan. You can go a little higher on debt to income ratios, and you do not need to be a first-time home buyer. So with an FHA loan, there's just a lot of flexibility, so more people are able to qualify to purchase a home.
Okay. And so what defines a first-time home buyer in the eyes of a loan officer?
Yeah, so first-time home buyer is, of course, someone who's never purchased property at all, or someone who hasn't owned a home in 3 years. So if it's been longer than 3 years, then you are now considered a first-time home buyer.
Oh, okay. That's really good to know, because I think most people think if they've owned a home before, they're not technically considered a first-time home buyer.
Yeah.
But every 3 years, they would be considered a first-time home buyer.
As long as they didn't own any properties within the 3 years, then yeah.
So if they just don't have a lot of cash to put down, maybe they only have that 3.5 saved up, and they owned a home 5 years ago, and they want to get back into the market, correct?
Yeah.
Okay. So Lisa, would you say that's the biggest misconception with an FHA loan?
Definitely. Due to the lower down payment requirement and lower credit score requirement, a lot of people assume that it's just for first-time home buyers. But an FHA loan is not just for first-time home buyers.
Okay. And then what about if somebody, could they still put down like 5% and utilize FHA?
Yes, definitely. Okay. You can put down, again, when we look at going through a pre-approval, we're going to see what best benefits each particular client, what fits their needs based on how much down payment, where their credit score is, all those factors come into play. But with an FHA loan, you will always carry mortgage insurance, even if you put more than 20% down. So that's something to keep in mind.
Okay. And that mortgage insurance then varies based on the purchase amount of the property?
Yeah, so based on the loan amount will be your monthly mortgage insurance.
The loan amount. I think yeah. Loan amount, not purchase amount.
Yeah.
Okay.
Yeah.
And are there specific closing costs associated with FHA as opposed to maybe like we talked in the first series, conventional?
So the difference is that upfront mortgage and the upfront fee that we spoke about of 1.75, but again, that's built into the loan. So it will increase your loan amount a little bit, but you're paying that within the monthly mortgage payment.
Okay.
There really aren't any additional fees. They're all pretty standard.
Okay. So Lisa, if a homeowner would like to refinance and maybe get out of that FHA loan because they're tired of paying maybe that private mortgage insurance, are they able to do that? And at what point would you say they would be able to do that?
Yeah, you can definitely refinance out of an FHA loan. Of course, once you have the equity in your home, a 20% equity, you would want to do that to drop the mortgage insurance. Also, if rates changed and they drop significantly, right now rates are a lot higher, maybe a year or two from now rates are lower, maybe you don't have that 20% equity, you can still refinance into another FHA loan to then get a better rate.
Okay.
Yeah.
And that would lower that private mortgage insurance?
It would be based on the loan amount.
Okay.
The mortgage insurance is always going to be based on the loan amount.
Okay. And then how would a homeowner know if they have the 20% equity? Who would let them know?
Again, reaching out to your real estate agent, always, looking at other homes in your neighborhood that have sold, reaching out to me, reaching out to your resources to say, hey, do I have that equity in my home? How much equity do I have? I would say it's good to do an annual checkup with me every year just to say, is there any benefits for me to refi? Have rates gone down? I do my best to keep my clients informed as well. But if you ever have any questions, you can reach out to me anytime.
So Lisa, what would you say would be like the number one advantage to an FHA loan?
One of the advantages is that you can buy up to a 4-unit property. As long as you live in one of the units, you could utilize the income from the other units for qualifying purposes. So it's a great way to buy your primary, but you're also kind of buying an investment within that primary as long as you live in one of the units. That's a huge advantage.
That is huge. So someone could go buy a 4-plex, live in one, rent out the other 3. So you're not only investing in yourself by owning a home, you're really investing in some good real estate.
Yes, definitely.
And for your future.
Yes.
So that's a great advantage, what we just discussed. But what would be the biggest disadvantage to an FHA loan?
A disadvantage would be that there is that upfront fee as well as monthly mortgage insurance. And the only way to get rid of that mortgage insurance is to refinance out of an FHA loan. Unless you put 10% down on year 11, you could drop that mortgage insurance. So a lot of people are misinformed when it comes to that. But if you do put 10% down, year 11, you can drop the mortgage insurance. Otherwise, anything less than 10% down, you will have to refinance out of that FHA loan to get rid of the mortgage insurance.
Okay. And do you find that homeowners think that that's a hassle to refinance out of that loan, the process to refinance, the cost involved?
It's minimal cost for a refinance. It's a very straightforward process. So again, reach out to me. I could always guide you and see if it's a benefit to refinance.
Good to know. And then what about, I'm going to assume, just because you had mentioned owner-occupied property, so an FHA loan would not work then for, let's say, something like a mobile home or land?
No.
Okay.
Yeah, no, it's for a primary home. In certain circumstances, you can purchase with an FHA loan again. Change of employment has to be more than 100 miles from your current residence. So there are opportunities to buy again with an FHA loan if you already carry an FHA loan, but there are specific circumstances to that.
So Lisa, as you know, I list a lot of properties, and oftentimes I'll call you or I'll have you come out to the property and say, Lisa, do you think this loan type would fit this property? And so currently, I had you visit one of my listings that needs a little bit of TLC, and I asked you, Lisa, what type of loan would work for this? Would FHA? And you said no, and why is that?
With that particular property, the foundation was in question. So with an FHA loan, there are health and safety guidelines. A property has to be habitable, has to be livable, everything has to be operating and running. So that's why I suggested a conventional loan for that particular property.
Okay. And you're saying health and safety in terms of, you said everything has to be running. Can you mention what that?
So they're going to make sure that the oven is working, the stove is working, water's running, toilets are, the property's up to par and livable. So there are those additional guidelines with an FHA loan.
So would there be any kind of loan product out there for a first-time home buyer obtaining FHA financing for, let's say, a fixer-upper like that?
Yeah, there is an FHA 203K rehab loan that could potentially be an option. But again, you would want to reach out to us to see if any specific property would
fall into
that. Right.
Okay. So, yeah, because I know that just from my experience with those types of loans, the FHA 203 rehab, there's a little more involved in that.
There is a little more involved with that. So,
yeah.
Again, always reach out to us with any questions you may have about a specific property.
Yeah, so we're not going to touch on that today, but maybe in the future, or if you'd like more information on that loan, again, feel free to reach out to Lisa or myself. And let us know in the comments if you would like us to do an episode on what a FHA 203 rehab loan is. And with that, I feel like this ends today's topic on FHA loans. Be sure to like and subscribe. Feel free to comment below if you have any questions about what Lisa and I discussed today. And don't forget to come back next week where we're going to be discussing VA loans. Lisa, thank you again.
Thank you.
See you soon.